is MGM Resorts. It's a stock we've talked about before. It owns and operates casinos in the United States and China, in particular in the Las Vegas Strip, because those of you that have been there will know that there's a city basically dedicated to gaming and gambling, and those include properties like the Bellagio. That's the old fancy one that has the musical fountain in front of it. The MGM Grand, which is basically a gambling venue, but also a venue for major permanent shows. So, for example, like David Copperfield, or someone like, I don't know, Britney Spears will come there and do like a 6-week section where they perform in an incredible stage production. People come from all over the United States to America to watch that. And then also on the Strip, there's another property called Mandalay Bay and Aria, which is other, one end or the other. But the other major area of involvement for them is in Macau. Now, Macau is an island off the mainland of China, used to be part of the Portuguese colony, reverted to China, and they set it up like Hong Kong with its own special economic zone and a whole lot of casinos for some reason. So that's where all the Chinese go to do legal gambling. Anyway, let me stop for a moment here, but $12.65 billion worth of market cap. Now, that's tiny by international standards, big by our standards once you multiply that by 15, but not particularly huge in terms of international market. Not currently profitable, not paying dividends. So that sort of tells the story as well.
Yeah.
What did you ferret out about these guys?
Look, they're big in terms of the number of people they accommodate. 40,000 odd rooms, which is sizable. Occupancy is brilliant in that, and I guess that's because you've got this captive market in this Las Vegas Strip. 90% occupancy. You'll see our local guys are a lot
Really?
lower.
90% occupancy?
So they're able to really sweat their assets a lot better, but not massively profitable. And as you say, not particularly big, less than 200 billion for something that looks very flashy, but not too much.
And I saw that one of the things they'd done with their Vegas properties is they'd offloaded a mall which was inside one of their MGM Grand, I think it was called like the Vegas City Center shopping mall. So they'd actually obviously done a big development. But part of the problem is high levels of debt.
Yeah.
These guys will think nothing of loading up incredible levels of debt. They don't typically issue new shares, and then as a consequence of rising interest rates or maybe a slight decline in the economy, and then there's a little bit less visitation, then they have to cut rates, it gets too competitive, and then the debt burden's too high, and then the whole thing looks tight.
And that's what happened in China, in China.
Well, let's talk about Macau, because mainland China, most gambling is not legal. The Communist Party decided that was not good for the people. You can gamble if you go to Macau, so that then creates like a massive tourist magnet. But recently we know that there's been a bit of a crackdown on, freebies and gifting and junkets and general misbehavior by sort of government officials and that sort of thing.
Yeah. And
Macau's been tight. It just hasn't been good.
And you could also argue they've opened up retail trading portfolios and geared portfolios
good point.
to guys, and that could satisfy a similar need, unfortunately.
So why go to Macau and go to all the trouble of getting into a bus or a train when you can open a brokerage stock account? This is not good. We better not be spreading this rumor. Okay, and then as far as this company is concerned, development prospects, I suppose it really is just waiting for some sort of an uptick in general economic circumstances. The US looks quite good. Macau looks a bit floppy and overtraded.
Yeah, Macau, I think they went in way too optimistic.
Too much bold.
They tried to provide for a certain amount of profit. I think it was $1.5 billion. They had to write down almost half of that, so that's not looking good.
Let's have a look at the share chart. Now, I must tell you, this share chart that we're going to see in a minute for MGM will be for the last 5 years. And that looks unexceptional and unexciting. It's at $22. But if you go back and look at a 15-year chart of this thing, let me tell you that the height of the market in 2007, this thing traded at $100 a share. So it just went up like a rocket ship because China, because this whole sense of emerging excitement with Macau. It goes right to the moon. Since then, it's come thundering all the way down, and now it's drifting sideways, waiting for some sort of traction, getting it going. Hot or not? I don't know.
Yeah, look, I think with the amount of debt on there, these things are really geared economic plays. And US looks okay. Bigger group, still a bit shaky. I'm not hot on this one, Paul.
Yeah, I think that's got to be fair. But it's an interesting case point anyway.
Of course.
To see. There's Las Vegas Sands. There's also Wynn Corporation, which is another one. That's the one run by Steve Wynn, who's very colorful and makes outrageous comments in his equity earnings announcement. So that's another one to look at. In any event, let's bring this conversation home now. We've talked about the global context.